YouTube, what's going on? It's Richard, founder of Short-Term Rental University and Airbnb Superhost. On today's Monday video where we talk about anything that's on my mind, today what I want to talk about is finding opportunity during periods of dislocation. For those of you that don't know, my first career was in finance. I started as a floor trader in the Chicago Mercantile Exchange and the Board of Trade, you know, the guys that are doing all the crazy signals and jumping and spitting and all that. And I learned that, and then I went to business school. I got recruited from business school to become an asset manager, and I ran a $1 billion portfolio investing in hedge funds, and then ultimately a $4 billion portfolio. So while I'm not an active trader today, I have a lot of trader instincts, a lot of trader knowledge and experience. And what I want to share with you during periods of dislocation is oftentimes it's the best opportunity when, if you stop and think about supply and demand, what you're ultimately doing is injecting or providing liquidity. So stop thinking about the price, stop thinking about your position, stop thinking about your portfolio, stop thinking about all the really minor stuff. Take a step back and say, what is going on here? And during periods of dislocation, we've all heard the adage about throwing out the baby with the bathwater. Well, that's what's happening during massive periods of dislocation, and it could be in the real estate market. Nobody's buying, everyone's selling, so there's thousands of homes for sale. It could be in the stock market. Somebody just missed earnings. Facebook missed earnings and the stock is tanking. It could be in the crypto markets. Bitcoin's down 50%. What's going on? It's all a function of supply and demand. And if you think of yourself as a liquidity provider, all of a sudden you may be able to take advantage of that dislocation and have a really great profit. So let me give you an example. I remember standing at the Bloomberg terminal when I was working at the Blackstone Group. This was 1998. We all know what happened in 1998. You want to talk about a vicious market meltdown and correction? It was just, I can't even put words to it. I had to leave the Bloomberg and go walk around the block. But when I returned, what I realized was this was just mass panic selling. Everything was on sale, every single thing. All fundamentals went out the window. All people cared about was a flight to safety, sell everything, hold cash. Makes a lot of sense. I could completely understand that. I viewed myself as a liquidity provider. I had dry capital, dry powder on the sidelines. So it almost didn't matter what I bought because everything was oversold and everything was trading at attractive levels. But I had to have the conviction to say, when everyone else is selling, I'm going to be a contrarian. I'm going to go completely against that, and I'm going to buy. And I remember it got so bad at one point that I literally thought fiat currency was meaningless. Everything was going away. The only thing that would matter was guns and gold. And when I started to fear and think that way, and the rest of the world was panicked and thinking that way too, what I realized was then it doesn't matter. Right? This extra 1,000 or 10,000 or whatever it was that I had dry powder, it's meaningless. If I only need gold and guns, $10,000 doesn't really matter. And so with that sort of I have nothing to lose mentality, I bought the bottom. And it's been one of the best investments I've ever done. I'm not suggesting that you catch a falling knife. I'm not suggesting that you buy the dips. This is not financial advice. But it is to say, take yourself out of the equation, take the fundamentals of the stock out of the equation, take your portfolio out of the equation, take everything out of the equation, and just focus on liquidity. Supply, demand, what needs liquidity? It's the same thing on the sales side. So if the stock is really running up or a crypto's really running up, the reason it's running up is because there's more buyers than sellers. You can provide that liquidity and you can sell. You can sell your position, you can go short, it doesn't really matter. But start to think of yourself as the function that you're providing, which is providing liquidity. And if you do that, you will find that you're very often on the other side of the crowded trade, and that's a great place to be if you're contrarian. It's been very successful for me personally. Tons of traders trade exclusively like that, and I think just thinking about it from that perspective might help you in your returns. So in closing, just learn as much as you possibly can about yourself, your function, remove yourself and your emotions, think about the opportunity as emotion-free as possible, and if you do that consistently, you're not going to make money every single trade, but more often than not you will, and you only need a winning percentage to move the needle significantly, compounded time and time again by trying and learning and refining, making it better. You will win. I really hope this has been helpful to you. Again, it's just my personal experience. It's not financial advice. Please don't go out and buy the dips because I said provide liquidity. Be thoughtful. Be true to yourself, but take action. There's so much opportunity in periods of dislocation. If you just sit on your hands and do absolutely nothing, you're not being fully engaged. You're not taking advantage of that dislocation. Think of dislocation as something being on sale or being a once-in-a-lifetime opportunity. Every so often we get those chances. Swing away. I hope you liked this video. Please subscribe to the channel, and until I see you next, happy hosting.